You just got a letter from the IRS and now you're freaking out. But before you panic, I've helped hundreds of people deal with these letters, and most of the time, it's not as bad as you think. So let me show you exactly what you should be doing. Hey, I'm John. I'm a tax preparer with over 15 years experience, and I've seen just about every type of IRS letter there is. And then today, I'm going to help walk through some of the most common ones, what they mean, and exactly how you should handle them. But there are a few rules though. The first one, don't ignore it. The second rule, don't panic. We will figure this out together. The IRS sends letters of a whole bunch of different reasons, but here's the most common ones. The first one, something doesn't match. The income that you reported doesn't match what your employer or bank reported to them. It's the most common reason. Number two, you owe the money, either through this year, the prior year, or multiple years back. Number three, they need more information. Maybe something you claimed and they need proof of, or a form is missing, or something that altogether was just missing from your return. Number four, they're just confirming. Sometimes they're literally just saying, hey, we got your return and your refund is processing. Not every letter is bad. Some are just informational and some are actual notices, but you need to know which is which. The first one is the CP 2000, which is the proposed changes to your tax return. This is the biggest one. It means that the IRS has information that doesn't match what was reported. And this could either be maybe your employer who sent them a W-2, but you forgot to include, or maybe the bank sent them a 1099 INT for interest you earned. The letter will show you what they have versus what you reported. They'll calculate what they think you owe, including any interest and sometimes the penalties. What you need to do is read it carefully. If they think that they're right and they are right and you did forget something, you can either pay it and agree to it, or sometimes even set up a payment plan. If they're wrong, and you know what, sometimes they are, you need to respond with proof. You have 30 days to respond. Make sure you do. The CP 14 says you owe them money. This is a bill, simple as that. You filed your taxes, you owe the money, and now they're just telling you, hey, pay up. It'll show the amount you owe plus any interest. If you can pay it, pay it. If you can't pay it all at once, you can call them, go online, or set up a payment plan. But don't ignore it. The penalties and interest keep adding up. Then you have CP 501, CP 503, and CP 504. These are reminder notices. These come after the CP 14. They're basically the IRS saying, hey, you still owe us money. When are we getting paid? Each one does get progressively more serious, however. So if you have the CP 504, specifically, it's a warning that, hey, they might actually levy your state tax refund or other assets if you don't respond. Same as CP 14, you can either pay or set up a payment plan immediately. By the time you get a CP 504, you're already running out of time. The CP 523, it's the intent to terminate the installment agreement. If you've set up a payment plan setup for, let's say, multiple years and you missed a payment or you didn't file your current year return, they're going to be about to cancel your plan. So what do you need to do? Get current immediately. Pay what you owe or call them to reinstate the agreement. And sometimes you can actually get hold of them and try to negotiate to redo the payment plan. If you're having trouble making these payments, contact them before they cancel it. Okay, so you've got a letter in hand. Here's your action plan. First things first, open it, read it. I know it's scary. It's a scary IRS letter, but you need to know what it says. Don't let it sit on your kitchen counter for weeks. The clock is ticking. Number two, check the notice number. It's typically usually on the top right-hand corner. It'll say CP 2000, CP 14, whatever it is. Google it, look it up, go to the IRS website, understand what it means. And number three, look at the response deadline. Most IRS letters will give you about 30 days to respond. I would take a calendar, go on your phone, mark it on that calendar. Miss that deadline and things definitely get more complicated. At this point, you probably want to gather all your documents. Pull your tax return for the year that they're asking about. Go to H&R Block, go to TurboTax, your tax preparer, whoever's doing your taxes. Get all of your documents. Get your W-2s, your 1099s, your receipts, whatever is relevant to the issue. And then you got to decide whether you agree or disagree. If they're right, you can usually just pay online or set up a payment plan at irs.gov. If they're wrong, you need to respond in writing with your proof. But make sure you respond. Either way, set up a payment plan, set up a letter explaining why they're wrong, and have your supporting documents. Always keep copies of everything you send. Don't send the originals. So let me tell you some of the mistakes I see people make pretty much all the time. They ignore it. Do not ignore it. I can't stress this enough. It will not go away. If it's 30 days or 3 years, the IRS is one of the very few organizations that can garnish your wages, levy your bank account, take your tax refunds away without going to court first. Do not push it off any further. Ignoring them only makes things worse. And don't assume it's a scam. Yes, there are definitely IRS scams out there, but if you got an actual letter in the mail with IRS letterhead and a notice number, it's probably real. The IRS does not call you out of the blue demanding immediate payment, but they do, however, send letters, and they usually send them in 30-day increments. Don't freak out, and don't just pay without reading it. Sometimes the IRS does make mistakes. I've seen it. Read the letter carefully before you do anything. But also at the same time, don't wait until the last minute. If you need help from a tax professional, give them time to review it and respond properly. Now, you can handle some of the IRS letters yourself, but here's when you should probably call a professional. If the amount you owe is significant, and what I mean by significant is like anything over $1,000. If you disagree with what they're saying or need to argue your case, you probably should call a professional. If it's a business return or a Schedule C, have a lot of deductions, or you're on already thin ice with the IRS. Well, this is another issue, but definitely call a professional. If you've gotten multiple letters and you're overwhelmed, and that does happen. If it mentions the word audit or examination, if you just don't understand what they're asking for. See, a tax professional can respond on your behalf, sometimes even negotiate with the IRS. And make sure you don't say anything or do anything that can make it worse. You just want to answer what they're looking for. So what happens if you don't respond? Well, in the first 30 days, most letters give you the 30 days. So if you respond within this time, you have some options and you'll be just fine. But if you're within 60 days, if you don't respond, they'll send another letter. And these letters now compound their interest and penalties, and they keep adding up. But if you're 90 days after this, they can actually start collection actions, again, without going to court. So they can levy your bank account, garnish your wages, even putting a lien on your property. Do not let it go to 90 days. Handle it within the first 30. If you need to, go to 60 days, pay the interest and penalties, but you need to handle it within the first 30. If you owe money and can't pay it all at once, there are a few options. The first option is the short-term payment plan. If you can pay within 180 days, usually if you owe $200, $300, $400 and you can pay within 180 days, this is usually free to set up right online or through calling them. But there's also a long-term payment plan. These are called installment agreements. You can spread those payments over several years. There is a setup fee, but it keeps the IRS off your back. You can set this up right online at irs.gov. Now, there is also called a offer in compromise. This is where you settle for less than you owe. It's rare that they approve these and you need a really good reason, usually a financial hardship, and this requires professional help, but it is another option. Listen, IRS letters are scary, but they're manageable if you deal with them quickly. You read it, you understand what they're asking, and respond before the deadline. Do not ignore it. Can't stress that enough. If the letter is something simple and you agree with it, you say, yes, I need to pay it, handle it yourself. If it's complicated and you disagree, get a professional involved. Now, most IRS letters are just notices or bills, nothing too serious. But sometimes the letter mentions the word audit or examination, and that's a whole different situation. If that happens, or if you just want to know what an audit actually is and how to prepare for one, I got a video breaking down that step by step, click right here or in the description below.